Hello traders, this is Matt Golden. Welcome back. I hope everyone is having an excellent trading week thus far. We've gotten through that longer weekend that we have, and markets are definitely starting to pick up a little bit more now. But what I wanted to do in this video that's a little atypical from what I've been doing previously is I'm just going to focus on really specifically the concepts and really focus on each indicator so that individuals who may have purchased these indicators have a resource and a tool so that they can understand this and start utilizing this for their trading. And then people who don't understand these concepts can start to say, hey, maybe this can help me in what I'm doing in the markets or the type of trading that I'm doing. Now, this video specifically will focus on the Larry Williams Electronic Market Accumulation Index. You can see Williams EMAI right here at the bottom. Now, this indicator, if we just want to focus on the definition of this indicator, it's meant to track large-scale accumulation or distribution, or essentially buying and selling an accumulation of shares or a commodity or a certain currency by these longer-term, quote-unquote, smart money actors in the market. And so what this model and what it's going to do for us is let us know that the conditions are present for a major trend reversal, essentially. And if we're trend followers and we trade off, we want to hold on to these longer-term trends, well, if we get in right at the beginning of a reversal and a trend continues to, wherever it may end up going, that can open ourselves up to, a lot of upside on a lot of these opportunities. And so what it's meant to do is really spot these trend reversals, these shifts among those longer-term buyers or sellers. Now, how the indicator is interpreted is we want to look for what's called divergence. So periods of time where price has moved either positive or negative, and the value of this indicator, so electronic market accumulation index, isn't matching that behavior, or is doing actually the complete opposite of what the market has been doing. Now, there's what I like to call long-term and short-term divergences, and I'm going to go through a lot of these markets. A lot of these I've covered in previous videos, but we're going to look at the differences between these longer-term and shorter-term divergences so that you know which one it is, what you're looking for and what you're getting involved in. Now, I would, again, using this approach, you always want quality and what looks the best, and there are even going to be times in the market, which are typically the best trades, where you've got not only a short-term divergence, but a long-term divergence as well, and that's just more support that, that trading idea may work. So the first chart I'm going to look at is Netflix, and we've got a couple charts from a lot of markets here, so a couple from each asset class, forex, stocks, commodities, and it all works the same. And that's a big key to this too, is this indicator from Larry Williams does a really great job on such a wide range of assets. So that allows you to be even more selective with the trades that you're getting involved in. But here with Netflix, we can see that market price had hit a low, a 6-month low. This is generally what I like to look for because it's very clear on the chart. You can't argue with a 6-month price high or low. And so we can see that the market was hitting a 6-month low, no argument there, on this trading day here. And we see that market accumulation was also hitting a 6-month low in its value. You see it's cleared all of this room down here, and it's indeed at a fresh new low. But as we move time forward a little bit, we see that something interesting started to happen. And so this is what I would call a short-term divergence, where we can see that price over this time period has gone flat. I mean, we're really, once you get to the close of this day, you've essentially gone completely flat. You're right there at 320, closing right around that area. But look what market accumulation started to do over this time period. We can see that market accumulation really comes off those lows, and as price wants to return, market accumulation just isn't getting back to these low points back here. Something is happening here, and we should take notice of it. And so we see as time goes by, we can even see that, again, this more price weakness, but market accumulation is without a doubt elevated here. I mean, even if we wanted to compare it to, this point here when prices closed, we can see that with no doubt prices have moved lower over that period and are still elevated with market accumulation. So, that's what I would call a short-term divergence. And definitely if you have Williams professional sentiment index or some of VantagePoint tools in line with that, that's going to be a higher probability trading opportunity. But we can see what happens here in Netflix. I mean, just a complete market reversal. And this was a very, very long-term downtrend that had been in place. But when these conditions started to align, that's when you wanted to look to go ahead and get long. And we can see it, about a 42% move since that little bit of accumulation started to happen. And when we take a big, look outside of this market, you can see that, if you're trading in these markets and you have signals like that telling you, look, now's the time when you would really want to be getting, long as a longer term trader, there's just no telling where these markets can go. There's no telling what things could look like months and years ahead of time. So you get a 42% entry on Netflix. Not a bad thing to hold on to. So, that's just the trading idea and the approach of let's use this to find the trade setup, and then we'll use the VantagePoint tools and maybe some of these other complementary tools to catch these major sorts of reversals in the market. Another stock opportunity here, and I've covered this very recently in some videos, is BP. And so this is what I would refer to as a long-term and a short-term divergence. Now, when we're looking at, what is a long-term divergence? Well, I'd say this period, really right here. And these longer-term periods right here where, price is without a doubt running into these fresh new lows. But when these lows get hit, especially right here, we are way off of the low in market accumulation. I mean, without a doubt, we compare this period of time here to and this period of time, and we've got that divergence and that move higher, which says, look, I want to look for opportunities to the upside. Let's take crossovers to the upside. But if you're aware, over this period right here that you want to be taking crossovers to the upside, we can see that that's turned out really, really well. And so far, again, just like Netflix, you've got a 15% move. In the stock. And so if you can get an entry like that and hold on and take some profit along the way and leave a little bit on to ride that longer term trend, that's not a bad deal to make. And you see same sort of situation with very different stocks here in BP and Netflix. Long-term downtrend, we have the conditions that say it might reverse, and that's when we should go ahead and take our shots in the market. Last one here is ATI, and again, this is just a pure long-term divergence. What I wanted to actually show here in BP is you actually started to get a little bit of a short-term divergence within the long-term divergence as well, because when we had this period of time over here, again, sort of a sideways price action, but market accumulation still climbing over that short term. So, once the short-term divergence happened within the long-term divergence, then things really started to get moving. ATI, pure long-term divergence here. Market accumulation is at this really long-term low if we look at it on the 6-month charts. Price being at that low, but we're elevated here. So, after this big run-up, enough buyers came into the market over this time period, according to, market accumulation here, that said, we definitely don't want to be short here at these price lows because it looks like there's some support from those larger, longer-term, smarter buyers. And sure enough, you get this pop off the market. And this, again, has been about a 10 to 15% move, depending on how aggressively you get on into the market. Now let's move over to some currencies. And I know a lot of people focus on the stocks, but one of the beauties of a tool like the Electronic Market Accumulation Index is, as I mentioned, it works across a wide range of markets. If we have even more selection, we can be more selective with the opportunities that we decide to get involved in. If we're more selective, we'll have more winners and less losers, as long as our strategy is, logically makes sense and we're consistent with it. So British pound, US dollar, I covered this in the last video here, but perfect example of a short-term divergence. You see market price without a doubt hits a fresh new low. No argument that is a 6-month price low at 150 on British pound. But look at market accumulation over this time period. We can zoom in on a shorter term time frame to see this, but market price low, but look at market accumulation grinding higher, grinding higher, grinding higher. Once the market gets to this level here, especially after a little bit of this upward price movement here, look at market accumulation really coming off that low, which is telling you, look, this is definitely a situation you may want to take note of. And if you've gotten in this level here, you've gotten 100, 150 pip buffer on a major trend reversal that might occur. Moving on to the next opportunity in the Forex markets, this is one I covered extensively here in Australian dollar, New Zealand dollar. And what I like about this trade, and you'll see this often in stocks, you may hold stocks long term, may find it difficult sometimes to know when you should be taking profit. Well, if you ever see a stock or commodity or forex pair that's doing something like this, where you keep testing these highs, but look at market accumulation, what it's doing. It's just getting weaker and weaker and weaker, saying, look, those longer term big buyers are starting to step away from the market. You may want to step away as well, or tighten stops, because there's not a lot of support for what we'd call that elevated price at that time. And you see what this often leads to. I mean, just a major trend reversal in the market. This ended up being, crossover to crossover and VantagePoint, a 600-700 pip move easy. But we see that, you definitely don't want to be long right before a, almost 1,000 pip move lower is getting ready to occur. So if you know that information going all the way back, to here, knowing that, look, the conditions aren't quite right to be aggressively long this pair here, you can make your adjustments and thus, cut losers short, take profits at the right time, and free up your capital so that you can go and do other things, so that you can be involved in markets where you've got, more conditions on your side. Next opportunity here, looking at some energies and one of the softs to wrap things up. I covered this pretty extensively here, that RBOB contracts pushing down to a 6-month low. Again, we cannot argue that this is a 6-month low, but we can also not argue that market accumulation is not at that low in price. We can see the peak very clearly when prices were here. So this whole period right here, there's that divergence happening where prices are moving lower, market accumulation's picking up, and so far there's been support there. If I'm a shorter term trader, I definitely don't want to be short when the contracts are gaining $12,000 per contract in value over that time period. That'd be terrible to be short there. And if I'm freshly getting into the market looking to get long, well, certainly a great time to go ahead and get long and get that market trending in your direction. Heating oil is pretty much going to be the same thing, but if you watch the videos that I made over this time period, there was more attention paid to RBOB and heating oil than things like crude or nat gas, because that's what these indicators are doing, is pointing you, where are your probabilities, where's the support from these larger term trading groups. And we can see this really clearly over a couple periods of time here, that market accumulation is moving up while prices are moving lower. We'll use VantagePoint to spot this reversal, and we're looking at $13,000 move higher in the heating oil contracts. So last thing I want to look at here is cocoa, and I'm certainly kicking myself for missing the entry on this opportunity here. I went on vacation on the 5th of February, which is right when VantagePoint was saying go ahead and get long cocoa. But we can see here that aggressive price rally lower. Again, we cannot argue by any stretch of the imagination that there's a 6-month price low achieved there, but look at this, what we'd say this long-term divergence happening here, where we're definitely not hitting this 6-month low. Additionally, we could see here that if we're trading the cocoa contracts, look what happens when we ran into this 6-month price low. Again, market accumulation picking up, and look what happened in the market. We didn't completely reverse at that time, and certainly the market needed to go lower, but this is an entire 2-month stretch of time where you certainly do not want to be shorting the cocoa contracts. I mean, you don't want to be involved in that. That's just going to tie up your capital, waste a lot of your time, and what you really want to be preparing for is, if you get long here, you get stopped out, and then it all lines up for you again to go ahead and get long again. So essentially making money on a short-term move higher, getting a better price, and making a little bit more money to the upside. So as always, I sound redundant with this, but I hope this helps anyone. If you're trading in the markets and having trouble and feeling lost, these tools can definitely help you get a grip on, what's happening here. What are the conditions right? Do I really have a chance for a big move that can make me a lot of money? And so what I'll do in the next video is focus on the Williams Professional Sentiment Index, and then make a video tying this all together with the VantagePoint tools as well, so you can understand what each indicator models, why that model is effective, and why the combination of these tools really protects us from doing anything too silly or just not something that's not going to give us that probability for our trading. So everyone, have a great rest of the trading week. Again, stay tuned for these videos, and thanks as always for watching. Bye for now.